Welcome, traders. Time being the most expensive commodity known, as it cannot be bought no matter how wealthy you are. Otherwise, John D. Rockefeller and J. Paul Getty would still be alive, and Bill Gates would never die. So thank you for being here. It demonstrates how serious you are about having more money, and that's why we're here together today, so that you can have more money. The markets are a place where serious money is made every day, but only by those who know how to read them. During the presentation, you will have questions. When you do, type them in a box and send them in. I'll answer as many as time permits at the end of the presentation. And yes, the presentation is being recorded. I've got to take about 7, 8, maybe 10 minutes to go through some slides so that you'll learn the patterns of price and volume. So bear with me. You see that we do have the Forex up, and we will be applying volume to price in Forex momentarily. That will make a whole lot of sense if we don't give you a foundation. So just be patient. This is a car of Richard Ney, my mentor, and I point you to the license plate. That was Mr. Ney's mission in life, was to show the masses how the people in New York and Washington are not on their side, that high fees, high taxes are crippling the middle class from having an opportunity to retire on time and on budget. So Ney wanted to show the patterns and how you could duplicate it. As he said, it's a shame you don't make money in the markets because these men do it so easily. A government mandated disclaimer. You've all seen these before. Most importantly, trading is not appropriate for everybody. It does involve risk. Don't trade with money you can't lose. My own public service announcement: always trade with a stop loss order on the floor. You don't know what you're risking before you get in. Don't get in. The sound of the waves happens to be an alert that tells me when a 5-minute bar is closing. And when we're trading the Forex off for a 5-minute bar, so in 30 seconds or so, the bar will be changing. So as I said, always trade with a stop loss order on the floor. Now the beauty of price and volume is because you are buying on down bars and selling on up bars. And you can write this down. True strength appears on down bars and true weakness appears on up bars. What are up and down bars? I'm going to get to that in the slides. Normally I tell people never risk more than 1% of their account, but because of price and volume enabling you to use the tightest stops in trading, I can point a way to trade 2% of your account, but never more. Over leverage is self-sabotage. All traders are looking for the Holy Grail. Everybody's looking in the wrong place. They're looking outside of themselves. And the Holy Grail is inside. If it ain't inside, it ain't going to be outside. And if you don't like the outside, then you're going to change the inside. And without patience and discipline, all your knowledge of trading is nothing. Just about everybody has knowledge, but few develop the latent skills of patience and discipline within them so they can harness their knowledge under the pressure while capital is at risk. It's the difference, it goes unnoticed except by the select few traders who understand how essential managing emotions is to your trading success. This is true. This is what makes the difference between losing traders, break-even traders, and people that make obscene amounts of money in the markets. And the markets do offer opportunity to make obscene amounts of money. Okay, so you can join the 5% who consistently take money from the markets. And that's the way the markets were set up. Markets were set up to take money from the many and transfer it to the few. Do you find yourself dreaming of time and money freedom? Do you dream about being your own boss, setting your own hours? You're here because you want freedom, because you want more money. And the markets do that for you. They're the great equalizer. I say this with all conviction and passion. Move you. And that's what I'm here today, to move you. Are you willing to do something different to get something different? All right. I've chosen a few slides from Forex mentees. Now, this is not typical, but it's happened far more than once in all the years that I've been mentoring. And I started in 2000, stopped in 2008, and picked it up a couple years ago, so that I could have this mission to help the masses take money out of the markets. This fellow, on June 21st, 2013, he started trading 3 days earlier. He started the course on the 14th, so I went through the course in 4 days. His first 3 days of trading, 413 pips. Full pips, 4,130 bucks. All he's got to say is, wow, this is amazing. For years he struggled to pull a meager 50 pips out of the market in a single month. 3 trades, 3 different days, 3 different markets. Same guy. Mark, now you got a trading ticket. It's trading size. 33 contracts. $6,720 of profit. It's stuck. That's a 7-8 months later. He's sending me his results. Is it teachable? You're damn straight it's teachable. This is Shamit. Now, he worked with me in 2008. He's from England. He spent 8 years till he ran into me. Once he ran into price and volume, he got it. Within 3 weeks, this is what he was able to do. He's able to say, these are his annotations, not mine. There was no demand. That's what these red dots are. Hard to see here, but you'll see them on my charts. But nonetheless, red dots mean no demand, and cayenne dots mean no supply. They have to do with volume. They have to do with professional intention. So here he's talking about this being a weak bar on increasing volume. And what happened was price went up and came and closed in the middle of the bar, and it did it on increasing volume. So what are we looking at here? We're looking at blue bars being increasing volume and red bars being decreasing volume. Red bars being down, price closing lower than the previous bar, and blue being up bars, price closing higher than the previous bar. So here he shorted at the open here, out for 300 bucks. Why he didn't trade in here, I have no idea, but when he came back, he found a downtrend, weakness in the background on a no demand, short at the open, 20 pips. Took another trade here, altogether $800, 80 pips in 1 day trading. It kind of does happen on Fog Street. Here's the same Shamit from England. This is a different day. This is news creating volatility. So what do we have? We got news here. We got a rate cut. News, contrary to popular misconception, it does cause volatility. That's not the misconception. The misconception is that the vested interests don't want you to learn how to trade it. Volatility is where the real money is made. So here, remember, true weakness appears on up bars. Professionals sell into the move. So he's selling up here. He likes to get these 20 pips. He found more weakness in this bar here, another 20 pips. He found weakness here, but he missed the trade. He wasn't there. So that could have been $600. Meanwhile, he walked away with $400 a contract that day. All right, so this is price of volume and how easy it is. And this is a Forex chart of the pound yen. And so we know that red bars are decreasing volume and blue bars are increasing volume. And we have a blue bar here closed well off its high on momentum. That is overbought, is a weak bar, price falls. So we want to be selling blue bars. Well, here's another bar that closed well off its high, overbought. We're in a downtrend. Easiest way to tell is how we learned in the trenches. Top, bottom, top, below a top, bottom and a bottom, top, below a top, bottom, below a bottom, top, below a top, bottom, below a bottom. That's the simplest way to tell trend, and if you can't tell trend, you can't trade, you can't make money. It's the line of least resistance. Is how money's made. So here we recognize this is a top. Look at the divergence here, and that should be one of your friends, divergence. If momentum is not going up and price is, there should be weakness, and there was. 184,300. 184,400 down to 183,400. You guys are Forex traders. You know what that means, dollars and cents to you. All right, so here's a trade that was by the book. And here we're in an uptrend, and this is oil. We're in an uptrend, and we're looking to get oversold. So look at this bar here, look at this bar here, look at this in here. Winners by the book. So here are your rules of engagement. You want to write this down. Price and volume is simple. Trading is simple. People make it complex. Shame on people. They're sabotaging themselves. So first you got to determine the trend, which I've mentioned. You can't determine a trend, you're screwed. Counter-trend trading is a tough way to live. It doesn't make money that easily. That's why it's counter-trend. I once met a trader who was so insecure that he always tried to get an unfair advantage. He never had a trend that he liked. And that was a joke, but it's true. It's what happened. So in an uptrend, there's only 4 factors here. In an uptrend, buy on a oversold strong bar. Remember, true strength is on down bars, and it's at logical support. And in a downtrend, you want to sell an overbought weak bar at logical resistance. So consequently, this is how the pros buy at wholesale and sell at retail. All right, so let's get into the pictures here and into Forex. Let's see where we're going here. We've got 3 pairs here. Oh, does anybody have any questions? Let's do some questions here now. This is news. Look, this is 5:30 in the morning. Okay, so there was news. News created the volatility. News created the volatility, not so much in the pound yen, but the dollar yen and the euro yen. And you can see the euro US dollar moved up on the news. The dollar yen fell on the news, and conversely, the yen pound did nothing. But I would imagine there's other markets in Forex that did respond to the news and others that didn't. Okay, I'm going to look here in the question panel and see if anybody's asked anything, and then we'll start reading the bars. Terry said something about True. Good morning, James. Hi, Tony. Guys, I would prefer if this was a participant sport, not a spectator sport. I'd love for you to engage and start asking me questions. So I'll open this up in a few minutes and see if anybody's got something. Meanwhile, let's go and look at the bars. So what do we have here? All right, here we got weakness. Look, we got high above a high, but we have the dots. And the dots are no demand. Look, it's volume falling off. If price wanted to go up, wouldn't volume be increasing? Wouldn't be falling off here. And look at the divergence you have here. Price is higher, but momentum is lower. So consequently, there's no, shall I say, doubt. You know why this is falling. What do we have over here? Okay, look at this. Here's a bottom, and is this not straight? Here is, first of all, high volume, okay? And volume has been correlated by so many different people in Forex. First of all, if volume wasn't so important, why would the banks have gone for all these years since the day Forex was founded? Why would the banks be crazy about not showing volume? You can't get volume. Why? Because we don't have a centralized exchange. Well, they could have a centralized exchange if they wanted to. After all, the money elite control what goes on with the regulators and with the politicians. So if they wanted to have a central exchange, they could have one, but they don't. Well, this is gotten by tick volume, and this is in TradeStation. And what I wanted to do was here, you format the symbol. Let me show you how to do this. Your settings. You got to use tick count. You don't use trade volume. You use tick count. And as I said, it's been correlated, and it works. And let's look here. This is high volume. High volume, contrary to popular misconception, is a reversal signal. Look what happens to price when that happens. This is a weak bar, and this is excessive volume, and once price done, it first came down, and it's heading down some more. Here you got high volume moving down, and the next bar is a bar that closes well off its low, but the volume is falling off. As you see here, all these bars, volume is falling off, and you're wondering what a green bar is and what an orange bar is. They're test bars. There's only two factors in price and volume. One is price and one is volume. Startling information. Okay, so what do we see here? We see strength coming into the market. And here what we did, we tested price. We came down here to see if there would be any amateur selling. And then here you see, this must have been buying. Pros must have been buying here. And then they have a down bar that closed in the middle of the bar with a no supply dot. And look what happened to price in Forex. Went straight up here to where you'd find logical resistance in this area here. So you'll have to see if we can get through 119.356 on this one. And here we're looking at this number, 114.361. Yeah. Okay, bars just closed, 5 minutes. What are we looking at now? Like I said, we had divergence here, and what this shows here is what I call inverse divergence. That's why this is white. Price is going up, but momentum has gone down. And it's not supposed to happen. So that's why we got one more bar here that they're working on taking price up, and we know where the resistance is. Okay, we have weakness here, and we have weakness here. And look where these bars are appearing. This test bar is alerting you. Price and volume allows you to anticipate what professionals' inventory objectives are, what they need to do in order to buy at wholesale and sell at retail. And selling up here was selling at retail, and buying down here would be buying at wholesale. Hey, at this point we're in a break-even trade. If we had taken it, we got it in right here, and We can have our stop here and either it goes on or we don't lose anything but possibly commission. So 0.296 was the high and 19.253 was the low. You can trade Forex at less than 10 pip stops. How about that? How about those of you who are here? How about you tell me the size of stops that you trade with? Can you guys put into the question panel the size of stops that you are trading with? Questions. Wait, can somebody put in here? All right. $10, $20 to $50 pops. Okay. 10 to 15. We'll find a way to do this. All right. Okay, so good news, everybody. So far, we told you that this was a place to buy, and look where we are. And we're right here trying to get through the resistance I pointed out here. So there's one for price and volume. And here we talk about this being a reversal signal, and we were doing it on this bar. And we've now come lower, and we're at this A here. So that's two correct calls here in the live market in real time, applying the engagement rules that we talked about. Now, if this doesn't get your attention, if this doesn't pique your interest in price and volume, what the hell is going to get you to pay attention to price and volume? So we talked about these pips, and the lowest someone said was 10, and the highest was 20 to 50. If you're trading with stops that are more than 8 pips, I'm telling it to you straight, you don't know what you're doing. You don't know how to read the markets. Your risk is excessive. Don't take too many losses until you're wiped out and you got to refund your account, which, by the way, is what they want you to do. And here we were just a little lower here, but you can see we called out here about price of volume told us right in here that you could expect resistance. This is where order flow comes in. Look here, we're going down further and further. So, again, tightest stops, you went short at 1.14443. And the low is 1.14319. One of you Forex traders want to say how many pips have in this trade so far? See if I can't get an answer to that. All right, so here after fighting that resistance, we're trying to go up, and over here we're trying to go down. Well, we can see if you can break through this area up in here, you got a free ride, kids. You're going to have a free ride up into this area here. Yep, see? Look what happened. Right? We said this area right in here was going to be trouble. And the same thing we talked about in here. And you see, look where this is stopping, right in this area here. If they break through this area and this area here, this one you got a nice ride all the way down to here. So all we can do is take what they want to give us and hold on to what they want to take away. As I said, I prefer participation. I don't know what you guys need to hear or want to hear. I don't know what your questions are, what problems you're having. I do know that price and volume in real time we were able to show what the patterns were and what the rules of engagement, and we came to apply them, and they're working on Forex, and volume is working. If you couldn't rely on volume, then why all it's showing this weakness up here? Why did price fall? If volume didn't work and it's showing strength on the volume here, why did price go up? If you're not trading using volume on Forex, you're screwing yourself. You're making it much more difficult than it has to be. Now, you're going to be a Shamit out of England who spent 8 years and 250,000, he says, in courses, losses, and software. And what does the 8 years in time mean to a guy who could spend $250,000, about $30,000 a year he was putting into trading? Or you're not going to be a Mark who is able to, as you saw, take out $4,000 and $6,700 in Forex trades. They're using price and volume. All right, so what do we get over here? Look at here where you would expect to find some kind of support in this area here. And we did have an oversold condition. And the market did try to move up. It's trying to move up. Time will tell. You have this is a huge bar of weakness. If this was strength, why didn't price close up here? Why did price close in the middle of the bar? And look, on increasing volume. High volume. So news creates volatility. And volatility enables you to make money, contrary to popular misconceptions. So I'm going to look and see questions. How about we do it this way? Bob B., I have unmuted you. Would you like to introduce yourself and anything you want to say about Forex or price and volume, Bob? Are you with us, Bob? Okay. Well, here's someone with a famous name, James Brown. I've unmuted you, James Brown. Anything you want to talk about, price and volume. Yeah, I know you guys are Forex traders. You came from James Edwards. So I know you're trading Forex. You've got someone who's been trading price and volume for 26 years. I think you guys would have some questions. I think you'd have something to say. All right, James Brown, we're going to James Lee. Now, James Lee, just because these other two guys don't want to take advantage of their opportunity with me, doesn't mean that you have to stay silent. Good morning, James Lee. Anything you want to talk about? Okay. I tell you guys, if this was reversed, you couldn't shut me up. I would pester you until you gave me what I needed. I'd make a fuss if you gave me an opportunity like this. All right, James Lee. John Vickers. I don't think you're here, John Vickers. All right. How about Larry Bradley? Larry Bradley. You not have anything to say either. Okay. Not quite sure why anybody comes here. You don't participate. You don't have any questions. Calling out trades in real time doesn't turn you on. Nobody's so shy that they're not answering questions. Somebody asked me about 5-minute bars. What is the indicator on top? It's a momentum indicator. Yes, they're 5-minute bars. I trade Forex and gold and oil on 5-minute bars and trade the S&P on 3-minute bars. So let's go look. Up. We're getting higher, and we're now at that spot here. They're going to need some effort to get through here. Effort was going to be shown in volume. So we need volume to come in here. At this point, we know we're not going to get a dot, so we can anticipate what is going to happen. When this happened over here and this happened over here, we can anticipate looking to find a place to buy out in this area and a place to sell out in that area. All right. S&P is just opening. Nice flat opening in the S&P. Let's go look at oil. Okay, look, here's news hitting the market. Did it affect oil? You're damn straight it did. You can see it. And oil is worth $1,000 a barrel for every dollar it moves in price. So from 46.90 down to 4,600. This is a $900 move off of the news, and we talked about high volume being a reversal signal, contrary to popular misconceptions. CNBC and Wall Street, Chase, Goldman Sachs want you to think this is a continuation signal. Well, you got followed by a bar of weakness right at the top, and price fell $900. What more can you say? And this is all being done spontaneously in the live market. But at this point, it does not seem that one of you has been impressed by price and volume's ability to read the market. All right, there's your S&P, and we'll go back to Forex. Just how did I do that? How did I tell you beforehand? Now, could you have used this to take profits? You're damn straight you could have used this to take profits. You knew when you were buying here that someplace up in here you could expect resistance. And you knew when you were selling here that when you got down into this area in here that you were going to find support. So it could have been profit targets for you. There's so much to this. But at this point, I'm not sure that any one of you recognizes an up bar versus a down bar. This is why only the few make money. I've been at this 26 years. I've mentored people in the toughest game in the world, the S&P. I've seen hundreds and hundreds and hundreds of traders in all these years. It's usually quite obvious the ones that are going to make it and the ones that aren't. Guys, I really don't know what to tell you. Nobody's responding to anything. Calling out winning trades before they happen hasn't impressed one person. Anybody have any problems in their trading? Any issues you're having in your trading that we can address? This bar's not going to close for another 2 minutes and 40 seconds, and I only have to look at a bar with about 15-20 seconds left in a bar to be able to decide where there's an opportunity to trade. Here, look, you got divergence here, you got a strong bar here, you're oversold here. No wonder price went up. You want to scalp? You can scalp like a son of a bitch. It's so easy. Your Forex is the easiest market to trade. Does that put a knot in your knickers if you're not making money trading Forex? It should. The fact of the matter is Forex is the easiest market on the planet to trade. I'm going to tell you why. People think the stock market is a big market. There's 300 billion the last time I heard go through the stock market in a day. The same thing happened with the bonds. People thought the stock market was the biggest. It's not, never has been. The bonds do about twice as much, about 600 million a day. A billion, excuse me. But currencies do, get this, and I realize it's not going to knock you off your chair, because nothing seems to move any one of you guys. It's really sad. Sad commentary on you. But the bottom line is $5.5 trillion goes through Forex on a daily basis. Now, do you think that there are any mistakes or coinky-dinks that take place in the market with $5.5 trillion at stake? Not so. Yeah, when $10 pips didn't bring in enough money, they went to dollar pips. And then when that didn't bring in all the money on the sidelines, when that didn't bring in all the money in the sidelines, the bottom line is they went to 10-cent pips. They aren't leaving 10 cents on the floor. We're dealing in a world with trillions of dollars are now being spent, and these guys are going after dimes. But all those dimes add up. So consequently, basically what they've done in Forex, first of all, they hide the volume. Well, you saw how volume helped us in these trades. And we noticed you found the support right here where it was shown. And here we had a bar of strength of divergence. And here we have real divergence. Here we have this weak bar on price. But notice the momentum is going up. And that was a beautiful way to get into a trade. And it didn't matter whether you bought on this bar or that bar. You're looking at an open of 0.891 and a low of 0.843. Again, less than 8 pips. I said to this you beforehand you could. So you who said you trade 20 to 50 pips, and I've just shown you all these trades that have come in, and they've been less than 8 pips. Does that get your attention? At 10 pips stops, you're getting closer for those of you. But obviously, the person that's using this, we can find it here. I don't know, whatever happens to this question panel here, sometimes it comes out here, usually 20, 50 pips. Is that J.A., James something? Does that get your attention? You would think so, but apparently not. Okay, so here we are. We went up. Look where we found it. Look where you found your resistance. Now we're setting a new low. And look at what happened. We came up just like the pattern I set. In a downtrend, you're looking for up bar to sell. Look what happened. Here we had, in a uptrend, we're looking for a down bar to buy. So look what's happened in both of these. The pattern went up, came down, moved in that direction, or vice versa. If it didn't work, how can I tell you about it beforehand? Okay, so if I click on this one, okay. So we'll just see how far this is going to run now that it has this entire area to play with. Yeah, look where we had resistance here, right at the top of this bar here. What happened here is amateurs are buying. Amateurs love to buy breakouts at tops and sell breakouts at bottoms. They're notoriously wrong-footed. So as I was saying, Forex is the easiest market in the world to trade. These people have so much nerve that they feel so secure in their position. In Forex, basically what they've told people is, we're going to fuck you. And then they do fuck you. And then they tell you, be happy about being fucked. This is why the vast majority of people are losing money in Forex. The biggest money maker in the world for people that trade. They have a license to steal from you. Okay, here we go. We're moving up into this now. We're moving down into this. Look, look, look. Down, down, down. Up, up, up. All right, new bar opens over here on the right and opens lower. The new bar opens on the left where the bar closed. All right, left and right are continuing. Yeah. You trade what the market gives you. And the pound yen hasn't been the one we want to pay attention to. The ones on the right and the left have been. Look, look, look. Nice and easy. Once it broke through, it's moving as expected. Oh, here we go. Look, look, look. Look, look, look. That's all I can do. Top was put in. Same pattern. Look how damn easy this is. Here you got divergence. Here you got weakness. Here we have now closed this gap. We've now come below here. And look where we're finding support. Just as I pointed out to you, when we're in this area in here, we talked about this. Price and volume told me to tell you this. And that's exactly what happened. And price and volume, same thing. Here, we haven't quite closed the gap here, but If we look in the background here, we're probably starting to see some resistance. Yeah, see? Look at this. That's why it's stopping here. You got all this business on the floor that has to get taken care of, all this volume. Look what happened on the news. So, why are we stopping here? I'm going to tell you right here. My eye tells me this is a great order flow line right here. I started looking here and went across here. This is where money has changed hands between amateurs and professionals. Look how perfect that is. Bottoms here, tops here. Now, drawing order flow lines is a skill set. It's an art and a skill set. The bottom line is, there's your line, and that's why it's stopping here. I don't think that you could attend 50 webinars and you could find somebody else that could have told you these things before they happen. Just stopped here. Let's see what's in the background here. Oh, you see? Nothing until you got down here, and that's exactly where price is at right now, almost to the pip. There's no accidents, gentlemen. There's no coinkydinks that happen here. Everything that happens on a chart happens for a reason. See if that brought anybody out here with any questions. Nope. You guys, you could really do me a favor. Could you tell me why you showed up? Can just one of you, would one of you please, I'm literally begging, I would love to know why any one of you showed up here. It seems that I care more about you making money than you guys care about making yourselves. So go spend another 5 years losing money. Go waste 5 years of your time. That's what the market wants. That's what it was set up to do. And everybody thinks, they're going to hit it. They're going to make it work. Just one more time. But they don't change anything that they're doing. They do the same thing and expect a different result. And we all know that that's a form of insanity. Not one person will tell me why you showed up here. I'd like to know. Find out what motivates you so I could be effective. As far as I can see, I've been effective calling price and volume and giving you the keys to the kingdom. I can't get one person to engage. I can't impress one person to say, wow. I can't get one person to say, you're full of shit. You can only believe this if you've been a part of it. Oh, well, that's how you can get this thing up. Well, I figured that out. At least I figured something out. Look at this. What a beautiful, beautiful trade. So the news caused price to go up and gave you an opportunity to look for a sell. The price came down on the news and gave you an opportunity to look for a buy. And that's how it works. Do you realize that information is priceless? You could take that information and in the course of years make millions of dollars, and I'm not exaggerating. Alright, so we stopped here where we saw the resistance in the past. And we'll see what we can do about getting through here a second time. Or I should say a first time. The second time we approach that area. And we're doing the same thing over here. See if we can't get volume. See, I said to you, you had to have volume to make this happen. To go up here, I was saying, back over here, you're going to need volume. And look, here's where the volume came in. I know that's not going to get a round of applause. I'm not going to get a thank you. I'm not going to get, wow, I never knew that. So here we have weakness. Here we had a bar of weakness. We can see price went up. Momentum went down. That's what it's telling you. And not surprising that price fell here. Not at all. So are we shocked that we're finding support here? Absolutely not. So you guys can do the math here. From 1,400 to 1,100. You guys can do the math. You can do the math over here. We'll find out here if we can break out. We're going to need volume, and we do have some good volume here. So this is effort. It's making effort. Let's see what can happen here with 6 seconds till the bar closes. We won't have a dot, so that won't be weakness. And we got some pretty high volume here. Higher than these bars back here. So there's a good chance. They're trying to take it a little higher. See if they can't get through there. But you see, it took effort. It took volume. Something that you don't know about because they don't want to tell you about it. So I ask you again, why do you think they hide volume from you? You see, it's working. Look, here's high volume here, and market stopped. Okay, here we go. So, back in here, I was talking about you needed effort, and that would show up in volume. You need volume to push this. And look at the volume, and I don't care that this is red. It's higher than anything else out here. So, look where we're going here. Just like it took volume to get through this area here, it's taking volume to get through that area here. And here the volume was somewhat coming in because we found support. Now we'll see if we continue to move back. Trying. So this is a beautiful pattern. They wrong foot you in the news. They go one direction off the news, and all this was covering short selling, and it was covering their ass by buying, accumulating inventory, so that they had an inventory objective to raise prices, which they did. This was all covering their buy, and then short selling into the demand by amateurs, and voila, a nice beautiful trade to the downside. So let's see what we got going here. Once again, now you're hitting this resistance here. There's no accidents. There's too much money involved, folks. And so they're not playing games. It's your money to win, to lose, to grow, to protect, to let go. Let's see what's happening in oil. See if we got a pattern there. Okay, see the exact same thing. The news came out. They drove prices down. And a test bar at the bottom. They found support and an order flow level here. And increasing volume. Buying must have come in. And this has to be stopping volume. But you won't see it, because you're trading Forex without volume. So here we want to buy a down bar. And voila, oil went up a nice $700 a contract. And then look at the divergence. Look at the weakness of this bar. Now, if what you wanted was for the day was $200 a contract, this bar got it for you. What does that represent, $200 a day? 20 days a month on average for trading? Well, if there's 20 average days for trading, then I gotta tell you, times that by 200, that's $4,000. If you're trading with that margin, and I told you that you could trade with a $80 stop in oil, just as you trade with an $80 stop in Forex. Now, this information is priceless to know what to risk. The guy was doing 50 pips stops. That's 6 losing trades that he has to make up. And you know what? Am I shocked that he left? No, I'm not shocked that he left. People get into habits and they just want to keep doing what they're doing, and they think something's going to change. Ain't going to change. Guaranteed it ain't going to change. That's why only 5% of people make it, and that's the way the game was set up. Okay, let's look at the S&P here. Came down, found support and order flow. Look at this bar of strength. Off to the races. There's a down opening, and they run into the close. This one trade. This happens 40% of the time or more. These runs into the close. And this went for 9 points. 9 points, $450 on 4,000 margin. More than 10% cash on cash. Does that get anybody's attention? Would you like to make 10% on a trade? It was right here yesterday. Overbought, in a downtrend, at resistance. Bar opened at 350. The high was 350. The tightest stops in all of trading. Doesn't matter what market. And that's a thing of beauty. Doesn't matter what market, what time frame. Price and volume work in any market and in any time frame. Now that's really cool. That's liberating for someone that understands it, that wants to be a part of it. All right, let's see if anybody has anything to say at this point. Okay, John. All right. There we go. Okay. All right. Hey, well, I'm prodding you. At least I'm starting to get you guys to react. Larry's badly's never traded Forex. Well, any market, any time frame, Larry. I'm just assuming that you are a Forex trader because you came from John Edwards. All right, let's see here. 28 pips. My volume agreed with EU down. How cool. Thank you, Terry. Terry, you left and you came back. Thank you for telling me that. All right, 25 pips. So, I don't know what's curious, T-Cat, but you can fill in here. Okay, he's never traded Forex. You talk about reversal. It's getting oversold. Does this need MetaTrader? No, it doesn't need MetaTrader. There's indicators I have for TradeStation, multi-charts, and Ninja. What are the dots, John? The dots are what has to do with volume. Volume is decreasing when you see these dots, okay? You see, red, volume is decreasing. Consequently, with the decreasing volume, it's telling you volume is drying up. You don't have to read it here, and you can see it in the background. You can see all this strength forming. First here with the high stopping volume. Then over here with a bar closing well off its low. Not on its high, but closed off its low. There's some strength in here. Then we come down. Look at the strength on this bar and this bar. Price closed above the middle of the bar. That in itself is telling you buying is taking place. And volume is decreasing. So these are called no supply. Pros are coming down here to see if there's any more selling. They want to see if there's going to be any more selling in the market because they don't want to deal with it moving up. Just think about that if you're a merchandiser. This is merchandising. Now we're getting into something here. It's merchandising. It's retailing, wholesaling. They're buying here at wholesale. They're selling up here at retail. You'd do it too if you could, and you can. Okay, so consequently, strength, 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 strength. Look at all this strength here. And if you look here, look, you got lower price, but higher momentum on both the line and the histogram. This is a great place to buy the market. And you can see what a nice trade it was. So, the top ones, John, are no demand. So there's no demand by amateurs at this level here. And they actually like that. When they want to sneak prices up, and that's an A term, they want to do it on low volume. They want to discourage. They want the buying up here. They don't want amateurs getting on board down here. So that's why these things happen. Again, there's so much money involved here. And it adds up day after day after day. That's why these high-frequency traders, they don't mind when they're trading and they're making a penny here, a penny there. By the end of the day, it could add up to $100,000 or $1 million. You know? Yeah. You want to make $100,000 a day as someone doing high-frequency trading, yeah, that's $2 million a month on 20 trading days. So, okay. I hope I answered that. You missed the start. Oh, yeah. Okay. I'm impressed, but I just need more explanation. And dots and orange and green bars. Okay, we got that. I hope, John. But if not, you keep doing it. Here. All right. 5-minute bars. Okay. I think we've done all the questions at this point. And John, I appreciate you standing up. One of a kind, John. So, I anticipated staying here for 90 minutes. But the fact of the matter is, nobody other than John seems to be interested in price and volume. So if you have any questions, put them into the box now. So, I have a course on price and volume. I say it's priceless. What does freedom mean to you? What does being able to extract money out of the market on a regular basis mean to you? What does it mean that you can do for you and your family? You're only limited by the skill sets that you develop as a trader. There are people making billions a year, so it's doable. And who gets paid the most? The people that know how to create money, manage money. And the market's nothing but a way of transferring money from the many to the few, from those that know how to make money, who earn it, to those who manage it. It's been going on since about 1971. It really started taking shape to where we're at today. So, it's a low investment in yourself. Are you worth $997? Is it worth for you to have the freedom to quit your job and to trade for a living? Is it worth it to be able to create an unlimited amount of income, to live where you want to live, to buy the clothes you want to buy, to send your kids to the schools you want to send them to take the vacations you want to take, to retire on time on budget? You can become an unlimited success, and you're worthy. You deserve it. That's why most traders fail, that inner game. They don't think they're worthy of it. So others think they're worthy of only so much, and when they make that amount of money, they start giving it back. So take advantage now of this opportunity to learn to trade with the market makers. You do have a choice. You can continue doing what you're doing, and you know what the result is going to be. Or you can be part of the you can stay and be part of the many, or you can become one of the few. And procrastination is very expensive. I did for decades in retirement planning, and I can tell you that money needs time to grow, and it makes a big difference as to how much you have. So this is guaranteed. It's a 30-day money-back guarantee. So you have absolutely nothing to risk. I'm risking everything. I know how good this is. I feel that once you get exposed to it, that you're not going to ask for your money back. You're going to go on to be like Mark and Shamit and make real money, whether it's in Forex or in any other market that you choose to. So I would have to say that with a 30-day money-back guarantee, if you're serious about trading and you've seen that there's serious money to be made, you would have to be foolish not to take me up on this offer. And to encourage quick action reward, for the first 5 that sign up, you're going to receive, after the 30 days, after you've had time to acclimate and understand it and have your questions ready, the first 5 who sign up will receive a 30-minute consultation with me about your financial future and how we can structure it. And that's what I did. I practiced law to high net worth individuals for quite some time. It started that almost 40 years ago. I was doing pension work, estate work, and business planning. So consequently, today as an attorney, I command over $500 an hour. Being able to talk to me with almost 40 years of experience in planning for business and estates and retirement, and 26 years of trading price and volume, I think it's worth the risk of spending a little time finding out if price and volume will help you attain your goals at no risk to you. So what is the course consist of? It's a 4-week course that consists of 10 modules providing the following information. And first you get a 5-minute video. I'm into simplicity. I'm not into making it difficult. They want to confuse you. I want to make it simple and straightforward with you. This is 5 minutes. And it's pretty much about the criteria of how to set up your trading day. What the rules of engagement are. Then we talk about what the market is, why it was set up that way to take money from the many and give it to the few. Then we're talking about emotions and your mindset. And this is the most important thing. Give a crappy system to a great trader, they'll make money. Give a great system to a lousy trader, they'll lose money. Guaranteed. People are focusing on lousy money, lose money, and those that focus on making money, make money. All depends what's inside. Then we get into 19 trading concepts, and we get into Richard Ney diagrams of professional behavior, and that's how I'm able to read price and volume. We're going to tell you what to trade. Then we get into Module 6, your stops, your order flow lines, and price targets, which we talked about today. Then we're talking about, in two parts, 3 of the modules, because people can only concentrate 35, 40 minutes, and I know that. I can only do that if I wasn't a meditator. Yeah. So as a meditator, that's what you're doing. You're concentrating. So I've worked on concentration, so I can concentrate for longer than 35 or 40 minutes, but the average person can't. So I've broken this up into 2 parts, with no part being longer than 40 minutes. So we're talking about how you read a chart, what the process is of trading, and how to trade gold. And that could be how to trade oil, that could be how to trade bonds. The same formula works for any one of them when you're going into a sector. And then we're going to deal with the miracle of compound interest. If you don't understand compound interest, you are going to pay it, and it is very expensive. Conversely, if you do understand compound interest, you are going to earn it. And Einstein called it the most powerful creation in history by man. Money grows exponentially. You start $10,000 making 50 cents on a dollar every month, literally grows to $1 million, almost 3, 297 I think it is. The next time you make 50% on that, that's going to be a $650,000 gain. That's going to get you real close to $2 million. Your next gain is going to be $1 million. Money starts growing exponentially, and that's the miracle of compounding it. Included with the course, the book that's helped more people than any other book that I am aware of is Napoleon Hill's Think and Grow Rich. And that book was brought to us by Andrew Carnegie. And he was certainly a rich man, owned U.S. Steel, and you've probably gone to a library that he funded. So we're then going to get into the Day Trader's Bible by Richard Wyckoff. Richard wrote, he was a tape reader like Ney, and he wrote from 1900 to 1934. He wrote books, one of which you get in the members area, along with The Power of Your Subconscious Mind by Joseph Murphy. This is a fabulous book. This is the inner game. This is where you change your paradigm and align yourself with making money and get away from the things that have hurt you in the past, held you back. You're also going to get the definitive guide of price and volume, which I wrote. Again, I'm into concise, precise, simple. It's 16 pages, 8 pages of Ney quotes and 8 pages of me telling you what you need to know about price and volume. One of the other people out there in price and volume is going to give you 48 pages on volume alone. I don't know what you can write in 48 pages on volume, quite frankly. You're also going to get the Ney report, which came out in 8/3/1990. And I took his course, and I got his nightly hotline when they were scheduled. And I also got the report that came out every 2 weeks. And it's different from the pocket guide that you read prior to starting the course, prior to coming here. Hopefully you were made aware of it. It is on the website. There's also a free trial to daily emails, which sometimes there's 3 or 4 of them in the course of the day. Could be on a pattern. Could be, hey, volatility is really high. The VIX is high. They're giving you money away. Buy a put, sell a call, whatever you have to do to get short on the VIX. You're guaranteed to make money. That happened in 2008. That sucker had never been as high as 89. Well, it made it there, and I was able to tell people, you're guaranteed money. Just bend down and pick it up. The VIX is 89. It's going to revert to mean, which is around 15. So it was a great opportunity. And those are the kind of things I point out in the daily emails. And there's 4 recorded live weekly webinar sessions, and the last 2 talk about the definitive guide. I get in there and read between the lines. You get in between my head, and you can figure it out that way. So that's what the course concerns of. There is a money-back guarantee, and the product is right here on the website, the first one here. And there is a premium course for anybody who wants to work with me in the live market. That's another story entirely. But here is the page to go to if you want to become a member today. And again, it's a 100% money-back guarantee. You give me $9.97. Within 30 days, you're not happy, I give you $9.97 back. It's not going to be an issue. So I had put in the chat box here as well. In the chat box, I put, if we can see it here, is the link to the course if you want to order, and there's also the link to the website here if you want to go and see what's available. That is definitely your choice. And let me just go back here to the home page where, as you can see, if you have not gotten the complimentary copy of the Pocket Guide to the Habits of Professional Traders, right here is put it in, and you're going to get this eye-opening book about how the market is controlled by the smart money. And as Nate said, he just wants you to be able to piggyback them, spotting their actions and duplicating them. So you're not on it by yourself. You become a member, you're going to get daily emails. You've got the other aspect, the recorded, etc. And you can always reach out to me and send me an email. I get them all the time. I'm happy to make the guidance that's necessary. When you're right, I give you gold stars. And when you're wrong, I give you a nudge to get you back on track. So we look at the markets here. And was this the likely spot where we find resistance? Which we did. And we come up here, we got a bar that's higher than the previous bar. But look what's happening with momentum. It's declining. So this was a logical place of resistance here. And consequently, we had divergence, and price has been falling. Here we have divergence as well here. On a longer time frame, here versus here, and price is falling. And here we found support where we expected it, and we did up in here say that here was your first resistance and here was your second. So here would be how to get a profit target. Let's just go check S&P here. S&P, how's that looking? See? Look at these indicators. You've seen this in different time frames. You've seen it in different markets. If that wasn't accurate, how is it that this is happening? You know this is a buyer weakness. And you know this is not a buyer weakness. And you've seen divergence here. And there's a beautiful trade from 1 to 90. We'll say 94. That's 7 points so far. It's $350. And again, you trade this with $80 stop. That's $5 for commissions and $75 for the loss. And here we opened up 1 point with $50. If you haven't traded the S&P, opened at 2,050 and the high was 2,001 even. Again, the tightest stops in all of trading. It didn't matter S&P, didn't matter. And Forex, let's see what's happening in oil. Here we have, look, here's divergence. Here's a weak bar on price and volume at logical resistance. Voila. The bar opened at 46.69. The high was 46.69. The tightest stops in all of trading. Why wouldn't you want to use that if you could? every one of these trades is falling in. I put it on the line before we looked at this, that you can trade with an $80 stop in these markets. And we had people point down they're using as much as $50, $500 stops, and I'm talking $80 stops. So you've seen it in all the markets. The markets have spoke for themselves. Price and volume have spoke for themselves. I really don't know what more I can say to any of you. I'm going to go look here and see if there's any questions, which of course I'm going to be happy to answer. And if there's no more questions, okay. Any more questions here? Oh, Terry says it's helpful, but he has distractions. Well, I'd love to undistract you and be of service to each and every one of you. And I'm not seeing any more questions, so I wish you guys all the success your hard work deserves. In the chat box again, and the links to the website, to the checkout. You have the website to go and look and see what's available to get the NA guide. Last call for questions. Anybody have any comments about today? You don't have any questions? Maybe you got a comment about today. Has anybody got a comment about today's? No comments? All right. Bless you all. If you need anything, you know where to find me. ProsperityTrading@roadrunner.com is my email. Other than that, I bid you a fond farewell. Trade to win, everybody. Have a great day. See ya.